Welcome to It Depends, a sales tax podcast by TaxConnex. I'm your host, Brian Greer. Sales and use tax can be confusing and very overwhelming, but it doesn't have to be. Whether you work in industry or at a CPA firm, or just someone who wants to stay informed about the latest sales tax laws, we've got you covered. Periodically, we'll explore different aspects of sales tax. So whether you're a tax pro or a novice, tune in and join us as we attempt to simplify the complexity of the sales tax world. This is It Depends, because with sales tax, there's rarely just one answer, and often that's our answer to many questions. It just depends. Just to provide, kind of a quick perspective on the business, I like to really think about the sales tax process kind of in three primary categories. First of all, we have kind of the consulting advisory practice here within TaxConnex, and that consulting aspect really helps companies identify what their requirements are from a sales tax perspective. For example, where do they have nexus, where do they have taxable sales, and so forth. Kind of the second primary aspect of what I look at and where we help companies is from a sales tax calculation perspective. So having some type of software that plugs into the accounting system or into the shopping cart to automate the application of the sales tax. And then the third primary category that we work in is really on the compliance outsourcing side. So taking that tax data and now preparing and filing the returns and remitting the payments to the taxing jurisdictions. So today, I'm really going to kind of focus on the compliance outsourcing piece of this, not really talk too much about consulting or tax calculation, but really kind of focus on, hey, you're outsourced currently for at least the return preparation, filing, payment remittance. Maybe it's not working out great, and we'll talk about potentially changing or switching the compliance outsourcing providers. So we're really focused on that piece of it today. The overall, main theme and main takeaway that I want you to get from the discussion today is that this really is not as difficult to switch outsourcing providers as maybe it was initially to set it up. I think a lot of times when we first work with a company that maybe has an in-house process or maybe they don't have any kind of a process at all, there's a lot that goes into defining that outsourced relationship initially. We got to set up tax calendars, maybe there's registrations in new states. It could also include implementing a tax engine, defining what the data looks like in terms of what the data outputs are going to be for utilization for the compliance process. So there's a lot that goes into setting up this process initially, and sometimes it can be somewhat challenging. But I think once you've got that process established, it's a lot easier to kind of pick it up and move it somewhere else than it was to initially start it up. So we'll talk about that a little bit as well. So digging in here in terms of, really what the first, a realization that maybe some of you have came to, or maybe you're kind of struggling with this right now is, do I have the right solution in place today? And sometimes we get involved in these discussions about potentially changing from a different provider to TaxConnex, and there's all kinds of different potential issues and stories that we hear. I'm going to share with you a couple, and some of these are very extreme examples. I think a lot of times we hear, hey, we just don't have a lot of transparency into the process. Our cash isn't necessarily tying out to the data that we send. Maybe we don't have a good point of contact to be able to ask questions to. Just maybe an overall feeling that the customer support isn't as good or at the level that companies want it at. However, there are some extreme examples, and I'll just kind of quickly share some of these with you. And these are real examples that we walk into from time to time. Recently, I talked with a company that the outsourced provider was debiting the client's bank account. So when it came time to remitting the payment, the outsourced provider was set up as a debit pull, so they could go into the client's bank account, pull the cash, and then remit that to the taxing jurisdictions. Over a period of time, the outsourced provider had been pulling the wrong amount of tax, or cash, I should say, and seemingly doing it on purpose. But then, again, these are extreme examples, taking that cash, overstating and over-reporting the tax due, and then coming back behind and filing a refund claim and keeping that refund for themselves. And the client started to recognize this when they reconciled their tax liability accounts, and it wasn't matching what cash had been debited from their account. And they started to piece all of this together. So that's a very, I guess, bad situation, obviously, that led that company to, look for a different solution. Other scenarios, sometimes there's maybe missed filings or a missed payment. But again, I think a lot of times it's just this overall feeling that I'm too involved in the process. I've got to oversee what's happening. I'm not getting the support that I want. I don't have the transparency. There's a lack of accountability by the provider. And if you start having those, I guess, doubts and concerns and those fears kind of creeping into your mind, it's probably time to at least, kind of start to look at and maybe evaluate some different options. And when you do that, I've tried to outline here just maybe some questions to ask. And interestingly, what happens when you are a second-time buyer, you're much more educated. And what I mean by that is maybe, you signed up with a company previously, you kind of see some things that aren't working the way you want them to do, and now the next time you're much more educated. Happens to me all the time, just in my personal life, or even if, anything that you do, you buy a car and then you decide after you've driven it for a while, gosh, I don't like that, and I don't like this, and I really wish I had that. And so the next time you're a lot more educated when you go to buy that item, whatever it is. And the same thing kind of happens here, is that, you go to potentially change, and now you're much more educated. You've got a better set of questions to ask that provider to make sure that you're getting really what you're looking for. So rather than read these questions off here for you, I'll kind of answer them from a TaxConnex perspective. But this first one, I think one of the things that make us very unique is that we do have a dedicated practitioner, a person that ends up being assigned to work with each one of our clients. So you do get more of a personal relationship rather than, kind of an 800 number or a ticketing system. We kind of approach sales tax in general that automation is wonderful and it's a great thing, and we leverage automation to a large extent in our business, but you have to have that human element and capability kind of wrapped around that technology to make sure the process works effectively. I also think it's important, and this is part of the transparency that I mentioned previously, what kind of reports are available. We provide very detailed reconciliation reports that very clearly and easily tie the tax data that's being sent to us directly to the cash that we've requested, to the payments that are being made. So it's a really transparent audit trail to be able to see exactly what's happened, and then taking those reports and those journal entries that we can provide you as well to make sure that your tax liability accounts are reconciled, hopefully on a monthly basis. I'm always a little bit surprised when I speak with companies that maybe haven't reconciled their tax liability account ever, or they haven't done it over the last year, for example. It seems like something that should happen on a monthly basis, but our reporting, I think, helps facilitate that transparency and that GL reconciliation process. From a notice perspective, I really don't want any notices in the business, but it's not realistic. There's a lot of notices that a lot of them are just noise, quite frankly. It's a update on a new form, or maybe it's a new rate, or it's something that isn't necessarily relevant to the returns that have been prepared. But every once in a while, there is a legitimate issue or a legitimate notice that has to be resolved. We log those in our system, make those visible and available to our clients. So again, providing that transparency so that even though you are outsourcing the work, you don't necessarily have to watch over it, but you have the ability to look into the process if you so desire to do that. From a data perspective, if you're currently outsourced, the mindset that I have is that if somebody else has been able to figure out how to work with your data, then we should be able to work with your data as well. That's kind of my starting point, and that's one of those factors that tends to make it easier to transfer this process rather than building it initially. Every once in a while, we'll have a client that has some unique requirement that we need to make some modification to the data. But if you've already got a process that's existing where that data is already flowing into the sales tax compliance process, it should be something that we can work with and manage for you as well. From a home rule jurisdiction, we're primarily talking about the Alabama, Colorado, and Louisiana examples. I have seen some scenarios where those returns aren't managed as gracefully as they should be. Maybe they've been missed, or maybe the provider just doesn't have the capability to file in some of those home rule jurisdictions. We fully indemnify our clients of any errors or issues on our side, as long as you get me the tax data and make your cash available to me, either sending me the cash or allowing me to access the cash in your bank account. Give me the data, give me access to the cash, and we're on the hook for everything else at that point. From an audit perspective, there's a couple of ways this can happen typically in terms of support. We do provide an element of ad hoc support in our monthly engagements. So that ad hoc support can really be used for any sales tax issue. So some of our clients will manage the audits themselves, but then kind of leverage us for support, guidance, oversight, strategy related to the audit. And that's just part of our engagements. Other clients will want us to fully manage the audit. They don't want to be involved at all, or at least they don't want to be interfacing with the auditor. They want us to kind of run interference and be that contact with the auditor and manage the entire process. We can absolutely do that. It is something that we carve off and put that into that consulting category that I mentioned at the beginning of our discussion here today. So once you feel like you've got an issue with your current provider, you've kind of interviewed new providers, you're starting to kind of narrow down your decision, and you're getting ready to actually make this transition, there's some important information that you need to get access to. I always encourage people to gather this documentation, certainly before making any announcement to your current provider. Most of the transitions that we work with from one provider to another, most of them work very smoothly, and the current provider is very accommodating and works with the client even though they're exiting. However, there are certainly some providers, and they tend to be the same providers that will often shut you off when you make that decision and won't help you secure this data and this information. So in my opinion, this is your data, this is your information. You just need to make sure that you've got access to all of this, prior to making that final decision, prior to making any kind of announcement to your current provider about switching. The tax calendar that I'm referencing here certainly has all of your tax IDs on it. It has your login credentials. It has any necessary passwords. Sometimes, and we'll talk about this in a little bit more detail, sometimes the outsourced provider has set up master logins for their personal use, and you don't have your own individual login. So understanding and gathering as much of that detail as possible, and knowing, for example, hey, here are my 30 states, I've got logins and e-file credentials for these 28, but these other 2 are being managed by my current provider. That's a really great information to know. It's something that we can work through that. We'll have to contact the states directly and get new e-file credentials issued, but it is something that we see on occasion where the company just doesn't have access or own those logins and passwords. So just make sure you've got access to all of this information. If you have any tax returns that are stored on your current provider's website that aren't available through the e-file site, make sure you get access to all of that as well. Sometimes there might be some local filings that aren't in an e-file location, or just depending on how far back the relationship goes, some of those e-file accounts may not have the historical data that you need. So make sure you've got access to those historical returns as well. It may be, fairly obvious, in terms of understanding termination requirements, but, really what we're looking at there is, you might have a 1-year agreement, and you might be in the middle of that agreement, and you might not be able to change, or you might have a 90-day cancellation notice. You definitely want to understand what that opportunity is from a ability to change providers, because the last thing you want to do is make this decision, maybe sign up with a new provider, and then find out that you can't cancel your current contract. So it's definitely a critical piece of the puzzle, but also kind of at the same time understanding really what's the transition time frame for the new provider. Is it a 45 days, 60 days, 90 days, whatever that case may be, so that you can kind of time that announcement of your migration so that it's timed appropriately when the new provider is able to get up and running. The last piece in terms of kind of getting ready to make this transition is really have a conversation and a dialogue about what do I do with notices that now come in for a prior period. So you've got a current provider that's preparing filing returns, maybe receiving some level of notices. Now you change providers. There's a likelihood that there's going to be notices from those prior periods. Well, what are you going to do with those? How are you going to resolve those? And specifically, you might be in one of those scenarios where you're not able to get great support from your prior provider. So a lot of times we have a dialogue around, what's the threshold of a notice issue that we say, let's just go ahead and pay it and move on. If it's $100, is it $200? There's some threshold where it's just not going to be worth the time and effort to try to get a response from your prior provider. So I think just recognizing that that's a potential issue and determining how you want to manage that prospectively is something that you need to think about. Now, what are some of the challenges? And I mentioned these before, but that the e-file login credentials, there's a couple of challenges here, and one of those is, provided you have the logins and passwords, all of these sites are going to have dual authentication as well. So even in those scenarios where you have logins and passwords, depending on where those authentication codes are sent, that may or may not be an issue. Sometimes we see those authentication codes are sent to an email or a cell phone number of an employee that no longer works at the company. And again, now what do? How do you get access to those e-file sites? We can work through that, but that now requires more time. So that's a potential challenge. A lot of our clients, certainly when we onboard them, and even some of them as we make the transition, they might have an email account set up where it's salestax@company.com or tax@company.com. So it's a more common mailbox. So those authentication codes would go to that common mailbox, and then you can set a distribution list on that common email box so that you can kind of work through that. The other piece that I mentioned before is if you do have a provider that has their own logins and passwords that they utilize to access the sites and then file for multiple companies at one time, they're certainly not going to give you those login credentials. And again, that's where we can contact the states and have the e-file credentials reissued. Sometimes that's going to take a power of attorney. There are certain states where even under a power of attorney, they're going to push back and they're going to say they need to speak to an actual representative of the company. So just kind of working together with you, we've never had an issue where we can't get these set up, but some of them may take a little bit longer and take a little bit more effort than others. And the second point here, from a challenge perspective, I mentioned and I think talked about pretty well, but it's just figuring out what do we want to do from a notice perspective in those prior periods, and maybe setting that threshold that says anything under a certain amount, we're just going to pay it and move on, rather than invest time, try to contact our previous provider and try to get them to resolve it. Hopefully what we talked about here today gives you a little bit more insight into the process, but feel free to reach back out and we can go into specific details with you. All right, here's a good one. Is there a good way to convert from being an SST account to a regular account? This is a great question. There are some states, and I don't have the list in front of me, there are some states that we can keep the SST registration in place and continue to file using that SST registration. There are other states that if you originally registered through the SST, we'll have to cancel that SST registration and open a new registration. So that's part of that. The onboarding activation process on our side is really understanding how those accounts were set up, whether they were set up directly through the SST or how they were established. But there's some of those that we can continue to file kind of as is. There are others that we'll have to cancel the SST registration, get you a new one, and then file under the new registration. I think that's it. So again, hopefully this was beneficial for you to see and understand. But I will go ahead and close out our discussion here. If you're not already in contact with somebody and you just have some kind of general questions, you'd like someone to follow up with you, you can hit us up at that upsource@taxconnex.com. Thank you, everyone. Bye-bye.
This has been It Depends, with another episode explaining the complexities surrounding sales and use tax. We'll see you next time.